Hey guys, welcome back to the channel where I like to talk about all things personal finance. And in this video, I am going to take you on the journey with me as I relocate my 401k investment balances. Quick disclaimer, I know I have not been around for almost a month or maybe a little bit over a month, but that is because I had a family emergency and I had to take some time to process that. I'm okay. Promise you, I am okay. It's just, life happens and I'm trying to process it. And I finally had a moment because I'm off these last few days that I wanted to get back and do this because I wanted to do this in September. I do this generally in September because when I decided I was going to do it, it was September, however many back years ago. And as far as like what reallocation is in whatever investment account you have. This is my 401k, but it could be your brokerage. It could be your Roth IRA. Like it's a pie, and that pie is divided into different slices. And it is recommended that you don't have your whole pie be stocks and you don't have your whole pie be bonds. You don't have your whole pie be cash. It needs to be different. And that needs to change throughout the years. So you can either change it never. That is considered the most risk. You could change it every 10 years. You could change it every 5 years. But you know me, your girl, special. I decided I was going to do it every 2 years because I love looking at my 401k. And 2 years was the thing that I decided for myself. So I didn't share the last time I did it, but this time I want to share just in case someone is interested in watching. So here we are on my dashboard for my 401k at my job. And right now we are on par for my personal goal. I'm not going to share that right now. I might share it at the end of the year and let you know if I got it or not. But, I'm happy because this is only due to, I think yesterday, and I think Friday. No, I think Friday we were down 1,000 points. I don't know. But it's only been up for the last 2 or 3 days, not even a whole week. And before that, the week was bad because of what's going on with China and trade. The same story that's been happening since 2025 began. But what we're going to do is after we look at, like how everything is going, they're saying I'm doing decent, whatever. I'm going to go down here in the bottom left and go to manage investments because that's where I'll be able to change things. And I can change my future investments. And that entails, let's say I put $100 a month. And right now, $100 a paycheck. And I'm saying $50 of that goes to stock and $50 of that goes to bonds. I could change it so that 60 goes to stock and 40 goes to bonds. Or I can do a change to my current investments, which is what I'm going to do. And I can do change one account, or I can do multiple accounts at the same time, which is what I'm going to click on. And then it says start your rebalance. It's a one-time rebalance. Rebalancing is a way to get the investment mix you want without making a lot of individual exchanges. When you rebalance your accounts, you move money among several at a time, resulting in allocations you choose. So what is my allocation? The one that I picked for myself after doing research is I take my age minus 100, and whatever my age is going to be, how much of the percentage I have in bonds, and then the other result, which I did the math, is 62%. That's going to be in stock. And in 2 years from now, it'll be 2% higher. I'll have 40% in bonds and 60%. And then by the time I'm 45, it will change accordingly so that as I get older, right now, stocks is like this and bonds is like this. As I get older, like by the time I'm 45, it's like this. And then by the time I'm like 50, it's like this. And by the time I'm like 65, it's like this. That's the point. Because bonds are not as volatile. And stock is volatile. That's the point. I get to increase my gains, and I'm considered technically young by investing standards. So I'm going to rebalance. They give me a chance of rebalancing all of the accounts I have or just a single. I'm going to do all. So by the time I retire, I will have, because I hope to retire on paper for 401k balances by 65. So at that point, the most I'll have in stock at 65 is 35%, and then the bonds will be 65%. That keeps me safe. I can live off of, I guess, the bond growth or whatnot, and still possibly have growth from the 35% that is in volatile stocks, which is comfortable for me. If it were to go to crap when I'm 65, it's okay because only 35% of my allocation is in stock and 65% is in the safer bond stuff. So now this next page takes me to everything that I have. And I think I have 4 accounts available. I have this one, which has 21,000 or a little bit over 16%. And that's large cap. And large cap are companies that have grown already, don't have much place to grow, but they have like a large value. Then a little bit further here, I have small cap investment, which has potential to grow. That's 7% that I have over here. Then I have total Fidelity Total International Index, and this is stock, but it's international. That's something I changed, I think, when I first got this job like 2 years ago, which I'm glad I did because it divests me from America. And at least 10,000 of my stuff won't be as affected if America's stock market goes to crap, which, it's gone a couple times. I have 8% there. I want to keep it there. But it is still stock. So it's, what do you call it? It's risky. Riskier than bond. Then all the way down here, I have a target date fund, which is where most of my stock is. And it's based on my age. So it's a little bit more risky. Target date fund is I would retire at 2050. They have some where 2060, that's even riskier probably. But I'm not 25, I'm 38. So that's why I did the 50. I have almost $50,000 in that, 36%. And then for my bond fund, I have 42,000, 32%. And then I should have went over this before, but the first column is the actual name of the investment. Then the class, which helps if you've never looked at your 401k stuff. This is how you can kind of start to understand. This class tells you it's a stock, it's blended, or it's bond, or short-term investments. I don't really know what short-term investment. If I were to guess, it'd be like some type of cash thing. I don't want cash at all of my stuff because I'm going to lose money, especially the American dollar, because the American dollar is going to crap right now. Okay, so, and then at the bottom it tells me that my total is 133 and some change and 100%. Now I'm going to change everything. So 100 minus 38, which is my age, is 62%. So I need 38% in bonds. And right here, my bond investment, I have 32. So I'm going to change it to 38% to make it easier. All right. And it says right now, 38% has been accounted for, but my desired percentage must add to a total of 100%. So I need to go up here and I need to figure out what I want to change. I think I'm going to keep my target date fund as it is because this is one of the riskiest things that I have, and I'm still young. So I want some risk. I want to keep my international. I don't want that to ever go down. If anything, that should go up a little bit. I think I'm going to leave it. I'm not going to make it go up, but I'm not going to make it go down. I'm going to leave it. Then I have small cap, which I think is more riskier than large cap because large cap has grown as much as it can to me. There's not more room. So I'm going to decrease. I've decided I'm going to decrease my large cap stake. So what that means is I'm going to keep everything the same. So 38, 35.9. So then it shows me here 73.9. I got like a little bit more than 25% to go. I'm going to keep this at 8.2, the international stake. And I'm going to keep this at 7.37, the small cap. So then if I go all the way down, they're saying 89.49. So 100 minus 89.49 is 10.51%. So I'm going from 16.4 to 10.51%. Tab out. So now at the bottom it should say 100%. I'm going to write this down for something I'm going to show you guys in a minute. So I'm going to really quick bond 38%, target date 35.90%, international, I'll name it 8.22%, and then my small cap 7.37, and then my large cap was the main one of the main changes is down to 10.51. So I went from 16.4 to 10.51, and then 32 to 38%. And then at the end, it'll tell me next. All eligible sources, but Elise Lee, rebalance my account now one time, rebalance my account now, and sign me up for rebalance notification to receive. I wonder if it tells, no, I don't want to do that. And then they're asking me if I want to do automatic rebalance. And I can do it annually, quarterly, semi-annually. I don't want to do any of that. I just want to rebalance my account now one time. Next. All right. You selected to receive by US mail. You can change. I think this is about mail. I still get my stuff given to me in the mail. Don't ask me why. Continue. Oh, they're saying I have to make a stuff. Click. What? Give me a second while I read this, guys. Click view. No, I guess I'm going to click all of these. Whatever. Fine. Continue. Rebalance and submit. Just telling me everything that changed, or only two that changed. Bond went from 32% to 38% because I was, in my opinion, a little bit underinvested, and I was overinvested in stock. So I went from 16% to 10.5% in the other. Submit. And it says fees are no short-term trading, blah, blah, blah. Submit. And that's done. Rebalance confirmation has been submitted. Please print and save for your records. I might print that. Print. Okay. On 10/21, we'll submit your balance request. Oh, at 4 p.m. We're going to do it today. What is going on? Now it says here at the bottom, rebalancing your account does not affect how future contributions to your account will be invested. To change how future contributions will be invested, please go to contributions, which is what I'm thinking I'm going to do right now. All right. All right. So let's go to contributions because I'm going to do the same thing.